All right, welcome back everyone to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
Not much, man. Just tired of some of these headline drama that we've been seeing over the last couple of days, but it is what it
China.
is.
China. I feel like it's just been China since last week, man. I mean, if you go back last week, Trump dropped that tariff thing, 100% tariff on China out of nowhere because he was having a bad day. I mean, the man got, he got passed down for the what is it called? The what's the award that they
Oh, the
give to
Nobel
people?
Peace Prize?
He got passed for Nobel Peace Prize. He was having a bad day. So he's like, you know what? Everybody's gonna have a bad day today. So he dropped the market. And yeah, the market went into frenzy, man. But you see, Monday came around and guess what happened? Everything gapped up, brought the market back up. But yeah, China has been in the news a lot lately, man. It's crazy. Today's session kind of wrapped up a little mixed too, with
Hmm.
all the stuff that's happening and all that stuff. So S&P was up about 0.4%. I mean, if you look at overnight, I think we were down a little bit, but then we came back and now, we went back up and dropped a little bit. NASDAQ also was strong up like 0.7%. Dow Jones was a little bit down, about 17 points. And Russell actually was up a little bit. So the Russell 2000 was up a little bit. So again, a lot of mixed news, man, especially with the US, China trade. And if you see after hours, even I don't know if it was after hours or during hours, we saw a little bit dip also because some other news came because of China. Trump basically said we're in a trade war with China. So again, just a lot of stuff about China, man. So let me get your input on that before we jump into the other stuff that we're supposed to talk on.
Yeah, to me, we are now in a situation where market headlines are now driving the price action.
Mm-hmm.
That seems to be what the markets are most sensitive to, and they're starting to react. Now,
Yep.
I will say this. The United States cannot bully China because China is negotiating from a place of strength.
Yep.
They're negotiating from a place of strength.
They have
Like
leverage. They have a lot of
they
leverage.
have leverage. So
Mm-hmm.
bullying them is not going to get you anywhere. You might as well get in a room, say, "Hey, we want to negotiate in fair faith and get to negotiate. Like stop making threats in the headlines,
Yeah. Yeah.
So, but it's just one of those things where I'll say as a trader, if you're trading weeklies, praying for you because you don't know one tweet can change the whole trajectory of the
Yep.
market, as we
Yep.
saw Friday. And then we saw over the weekend, he was like, "Oh, don't worry about China. Everything's going to be good. Everything
Yep.
gaps up."
Yep. He
And
said he
then
said I was having a bad day. I was having a bad moment. So
and then yesterday, soybeans tanked the market. Like, why would
that
Go-
that
why would
yeah.
Google be down because of soybeans? Why would
Yeah.
Nvidia be down because of soybeans?
Yeah.
Really? Okay. So when you see stuff like that, that is just a warning sign to be very careful with position sizing and with carrying risk overnight. Because again, this is what you're going to have to contend with. The VIX is over 20. When the VIX is over 20, this is the environment you're dealing with. But it just sucks that what's driving the VIX over 20 is headline news.
Mm-hmm.
And that's just a terrible, market environment to be in if you're trying to swing things overnight. So I don't know. I'm not a fan of it, but hey, what can I do if politicians and world leaders want to be children and argue and, talk crap about each other online with Twitter fingers? It is what it is.
Trigger.
It is.
What did
Yeah.
what did what did Drake say? Twitter finger turn into trigger fingers. Trigger fingers turn into Twitter fingers.
Like it's so childish to me, but it is what it is. So,
But the unusual thing that I see is every time we have a crazy drop like that, you always see those crazy numbers that somebody bought like a put on somebody shorted Bitcoin like
I
literally
saw that
before,
and made
and
like what, 88 million?
they made a couple of 100 million or something like that. It was crazy amount. You know what I mean? So and there's people who saw like people buying puts right before the announcement came out, right before that tweet came. So it's like
Yeah.
again, it's that
There's
market manipulation.
yeah,
Somebody
yeah,
always knows. Somebody
yeah.
always
There's
knows.
a there's a lot of market manipulation and a lot of insider trading going
Yep.
on based
Yep.
on some of these headlines. So
Yep. Yep.
we're not gonna sit there and act like, Nobody's
Yeah.
making money off of these headline drops.
Somebody always knows something, man. Somebody always knows something. But on a good side, I mean, earnings and sector leaders like we have AMD. AMD jumped like 9.4% today, based on our bullish analyst upgrade. We know potential with AI growth and all that. ASML, bro, I feel like we fumbled another bag with ASML. When you reviewed ASML, what, a month or two ago, it's like at $600, $700. Yo, y'all gotta look at ASML. I was like, God dang, that's crazy.
Yeah, that was they had their earnings, and I always forget that because they're overseas, they have their earnings during hours where we're kind of like the markets are kind of like closed because they're in the Netherlands, I think it is. Yeah, ASML is a $600 stock. They put up some pretty good numbers,
Mm-hmm.
and TSM is going to be tonight, right? So TSM, I'm assuming TSM's numbers are also going to be pretty good as well. So
Yep. Yep.
the thing that I keep trying to, and we'll probably talk about this later on, is that the earnings for some of these companies that have been reporting are actually been pretty good. And I always
Yep.
say this, earnings is what drives stock prices, right?
Mm-hmm.
So now I will say this though, we talked about the Russell months ago,
Yep.
and the Russell has now made an all-time high.
Yep.
Now, I want to put that in context though, because over the last 5 years, the Russell 2000 is probably up less than 10% over the last 5 years. The Russell
Yep.
2000 has done absolutely nothing over the last
Nothing.
5 years. It's done nothing.
Mm-hmm.
So I'll get into details about this later. So one of the things I want to say is that as we are in a rate cutting cycle where we're expecting the Fed to continue to cut rates, this bodes well for small caps, right?
Yep.
Especially because they need to raise capital to grow. So as they're able to raise capital at cheaper prices or refinance their debt for cheaper prices and pocket more money, that's a good thing for small caps in general.
Yep.
So to me, it does not surprise me that a lot of these small cap companies are leading these big moves because again, a lot of money has over the last couple of years has really poured mostly into large cap stocks.
Yep.
That's where a lot of money has been poured in. So now small caps have the potential to now maybe be a leader or a driver of growth. So it does not surprise me that money managers, especially money managers who haven't done nothing, who've been sitting on tons of cash, they're
Yep.
looking for opportunities.
They're
So that's
waiting.
why you see the Rigettis, you see the OKLOs, you see the EOSEs, you see all the quantum names and the nuclear names. You see a lot of money going into these stocks. You're seeing these big moves is
Mm-hmm.
because large caps have done all of the work over the last call it what, 5, 6, 7, 8, 9, 10 years.
Yep. Yep.
So,
Yep.
to me, this is a bit of a rotation, a little bit. I'm not saying you're going to ignore the large cap names per se, but there's a lot of opportunity in small caps because a lot of these companies that are growing, they're working on technology that is viable.
Mm-hmm.
It's not like something that you just creating out of thin air. Now, will all of them make it? I will say no. But if you do your research and do your due diligence, there are companies with legit technology where there is
Yes.
demand for their product. So keep that in mind.
Absolutely.
Yeah,
Absolutely. Like, and I know, like, we also in a place where if you look at a lot of those companies, and we said it before over and over again, those are mostly B2B companies. You know what I
correct.
mean?
Exactly.
So those companies have money. People want to invest in that. This is the time where you invest in the B2B companies.
Hmm.
That the B2C, like selling to consumer retail and all that stuff, you can see that a lot of them are struggling, some are not struggling, but money's not pouring into those stocks, right?
Correct.
Because this is not the environment for it,
No,
basically.
no.
So that's what basically we're saying. That's basically what we keep trying to hound into you guys. Like, this is the time to look at the B2B specific companies.
And to me, with companies that are small caps that have good viable technology, I mean, worst case scenario, they might just get bought out, you
Mm-hmm.
know, and that's
Mm-hmm.
still that if
Mm-hmm.
you're a shareholder, that's still a good thing.
That's a good thing. Yeah.
So,
Yeah. One thing I was gonna say is like the Fed chair. I mean, So two things. I don't know if you guys seen the revised numbers for the job market. So I think so far this whole year, I think we only added like about 200,000 jobs after the revision and all that stuff. Like it's not a lot. They say we are down like 58% from last year during this time. That's
Ooh.
crazy. So we did not add a lot of jobs at all. And again, we are in a unique time because again, are these jobs really being lost because the companies are not doing good, or is more there like there's automation now, so people are not being hired back in those positions. So one person cannot do a job of two, three people because of AI. So it's like you got to start thinking about those numbers too, right? And I also wonder what's going on with the shutdown. Are we going to see those numbers in there also? You know what I mean?
I'll tell you right now, no, the government does not care. What are we on day, what, 15, 16 now?
Yeah, they don't give a crap. I
Yeah,
mean, Trump was talking about like not even rehiring some of these people and shutting down some of those agencies. How crazy is that? You know,
just so they can get their way. That's wild.
that is crazy. That is
That's
crazy.
crazy.
But
That's
then again, you
crazy.
gotta you gotta treat the government also kind of like a corporation, right? So if they can figure out a way to not have as many government workers and be able to automate it, also they save money on that and also. So I mean, we're dealing with like a crazy change when it comes to employment right now. It is gonna be interesting in the next 5 years.
And I'll be honest with you too, man. I'm really skeptical about a lot of these like job openings that get posted online.
No,
A
that's all
lot of
ghost jobs.
I think of most of, I will if I were to put a number on it, I'd say anywhere between 50 to maybe 60% of those job postings are ghost jobs.
Yep, yep, yep.
I would go that high
Mm-hmm.
because there's just no. I mean, I'll give Citibank as an example. Citibank has a ton of jobs open, right?
They just they
And
just they just collecting resumes, probably going somewhere in the ether somewhere. The AI
yeah,
is probably doing all the communication back and forth.
I spoke with somebody at customer service with Citibank yesterday,
Mm-hmm.
and I was like, "Why y'all keep posting all these jobs?" You know what he said?
Mm.
He says, "I don't even know if we still hiring." I was like, "Wow." So I said, "Oh, so y'all part of that ghost job stuff?" And he was like,
Mm-hmm.
"I don't even know what you're talking about."
You're like, yeah, I know what you're talking about. But yeah,
That should be illegal. That should be illegal. And I'm trying to figure out how does that affect the jobs numbers? If there looks like there's a lot of available jobs, right?
exactly.
Somebody, man,
Exactly. But you gotta think about it too. Big companies always want to appear as though they're
is there
growing,
hiring? That's true. You're
right?
right.
And the only
Hmm.
way you can appear as though you're growing is if you have a lot of opening jobs. So there might be a little bit of play over there, to keep the company relevant, to make sure like it stays in front of people and all this stuff. So
Oh yeah.
now, yeah.
There's
So I absolutely agree with you. A lot of those jobs, maybe even more than 50%, 50% are
BS.
all ghosts. Like
Yeah.
yeah, yeah. Because if you go on LinkedIn today, click on any job on LinkedIn, you'll see over 100 people applying for a job that posted within hours. That's crazy.
Yeah.
And I won't be surprised if they start hiding those numbers so that way people don't see how many people are applying for jobs. But
Hmm.
it's interesting, man. We live in an interesting time when it comes to employment. It's
Yeah.
gonna be very, very interesting. The other thing that Jerome was talking about is he made some comment about softening labor condition and then also maybe more rate cuts before the end of the year. I mean, we don't know. We shall
Yeah.
see.
We got what, two more meetings, and I think we're going to get two cuts. So at least another 50 basis point because it seems the consensus on the Fed committee is that we need to get to a less restrictive policy and get
Mhm.
more to a neutral policy
Yep.
because of
Yep.
the weakness in the labor market. So I think we've got some room before we get there. So to me, and that's good for markets in general.
Yeah. Yeah.
If we stop all of the childish back and forth with China.
Yep. Yep. And so we look at all of those volatility that's happening in the market. Go look at the VIX. The VIX is above 20. I mean, we are sitting above where we close at 2063, something like that. I mean, when was the last time we seen a VIX above 20? Was it back in August, I think?
Yeah, let's
Yeah,
go.
it was back in August.
Yeah. August is when we saw the VIX above 20 for that one day, and then it came
Mm-hmm.
crashing down.
Mm-hmm.
Yeah. And I think back in September 1st, we saw a attempt, but
Yeah.
it came back down. So yeah, now we've got a legitimate VIX that is sitting above the at the 200 simple
Yep.
moving average.
Yep. Sitting about 200. So
And it's
it
tested it twice and found support there. So
yep. So there's definitely some uncertainty in the market. Now the problem is it's not the over it is overall market, and it's crazy the stuff that drops the market. Kind of like soybeans. Like what soybeans got to do with technology? You know, like I think like investors are very, and also you got to think about it. Like I'm pretty sure some of those algorithms are programmed to see what tweets are coming, what certain words
trigger
to look
words.
for.
Yeah.
Yeah.
Trigger words. Yep.
So it's not like I don't want you guys to think like somebody's actually sitting there like, oh my God, the tweet came from Trump. Let me go ahead and sell these. Like, no, it's
No,
literally an algorithm just like looking for any social media, any, and they probably have Trump ranked as number one. Like whatever he says, look for those code words, and then go and execute this exact formula, whatever. So yeah, it's not somebody sitting there like manually executing those orders, honestly, guys.
no,
So
no.
so just wanted to bring that to your attention. But Vic sitting up there, man.
Yeah. The VIX, to me, the VIX sitting at 20 just tells me you have to take overnight moves with a grain of salt. Because let me give you an
Yep.
example. ARM was up 9% in the after hours a couple of days ago.
Yep.
As soon as
I
the
remember
market
that.
opened, it just disappeared.
I remember that.
Disappeared.
Yep.
Today, OKLO was up 5% today.
Yep.
No, eight or nine
It,
percent
it
today.
was it was more.
We got to like what 191,
190. Yeah.
and then it at one point it was down 5%. That's a 15% swing
Yeah.
in one day of
Yep.
trading.
Yep.
So you have to understand when volatility is present in the market, you got to worry about both sides. If you in puts or you in calls, things can swing
Either way.
in either direction. So you just have to be real careful not to outwarm your welcome
Yep.
or to gab as much delta in your options contract so that theta doesn't eat the contract value too much.
Yep.
So, just be very mindful. If you're a trader in this environment, to me, this is more ideal for day trading rather than swing trading,
Facts.
in my personal opinion. So,
Yep. Yep.
yeah.
Yep. Speaking of OKLO, we had 1, 2, 3, 4 days of all-time high. I mean, we talked about 150 for a little bit, and that thing blasted. Like when I say blasted, it didn't even wait, it didn't breathe, it just blasted through 150. I think that day we were talking about, I think it hit like 160 or something like that. Yo, bro, can you believe this? Like from $5, 4, $3 in 1 year to this? Like,
Yeah, we hit a high today of 193.84
God.
before we eventually sold off. So, based on the market headlines, I actually took profits from my position.
Finally.
I told myself that if I get to 3,000%, I will sell some
3,000%. And those are shares or
shares.
shares?
So what I'm gonna do is I'm gonna sit on that and then I'm gonna reinvest them into leaps. So
Look at that. That
I don't
is that
I
is
don't
amazing.
I don't like the market environment now, but man, if you've been rocking with us since last August, or even if you would have got it in April when it came down to like $24,
Yeah. You would have even if it came down to $50, you was still a good position. You'll be
yeah,
up like 400%, 300%
yeah.
right now. You know?
And Shane says still no product yet, so they don't have a
Nope.
deliverable product yet.
Nope.
But again, I think when they reporting earnings, because I'm gonna be on that call again. Let's see. Their earnings looks like it's coming up in November. November 13th, I think is the potential date.
Yep.
So basically what they're doing right now is they're just building a pipeline of demand. As long as that pipeline continues to grow and as long as the technology stays intact, I think they're fine. Now, I will say this. You're always one Hindenburg report from getting dropped or one government contract or one customer pullback from the stock dropping. So again, the anticipated date for them to actually have a product is somewhere in 2027. So we still got a whole nother year. So anything can happen before then. But to me, if the demand stays the same and the product actually the timeline stays intact, we're fine. I mean, another company that also builds something very similar to them, but I think on a grander scale, go look at what SMR did today.
Yep. SMR. That's another one.
I think SMR, if I'm not mistaken, they made a new all-time high today.
Bro. I was telling you, I saw that flow from yesterday. I was like, I should have just, man, I'm mad at myself for that one.
Yeah, so this month, SMR, no, this year, SMR was an $18 stock, it's now $56 stock.
Easy, bro.
So, and I don't, I need to do, I have not done as much research on SMR compared to OKLO. I know OKLO's reactors are smaller, SMRs are a little bit bigger.
Yep.
But I need to see if SMR has a product that is live. That is something that I need to do because again, I'll say this again. SMR technology is real.
Mm.
When it will get deployed and used is what we don't know quite yet.
Right.
We're looking at a possible 2 year timeline. SMR technology is real. So, you know, I'm not gonna do if you do your research on it, you'll see why it matters and why people are putting a lot of money behind it.
Yep. Yep.
So do your research. SMR is one that I know builds a bigger product, and OKLO is another one
Mm-hmm.
that
Mm-hmm.
builds a product. So do your research on those things, man, because again, to me, I think that that's like the next, along with like quantum, that's like the next wave of like technology. Because I keep trying to say this, man, the demand for power,
It's ridiculous.
everybody knows it now.
Yep.
Everybody knows that the demand for power is increasing
Yep.
tremendously.
Yep. Yep.
So
Yep.
don't get
The, the,
left
other, the
don't
other
get
stock I
left
was gonna
behind.
say, the other stock I was gonna say, remember we talked about LEU back in the day? I think that was one of those
Oh
helium
yeah.
producing. That thing went from $166. Look at it right now. 460 was the high today.
Whoa.
That is crazy. And
When did you talk about that
we
one?
talked
That
about
was
this back in like in September or something like that.
Jesus.
Yeah, went from like 160, 170 to like 460 today. They hit
Wow.
460 today.
Wow.
Crazy, 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 crazy move.
Another one
Another
that
fumble bag by me. Like I
just
man.
just watching. Another one that has gone on a ridiculous run as of recently. EOSE.
Yes. Yes. That one, I'll be honest. I am in some contracts with those ones, so it's been paying nicely.
Let me give you another one that's been on a tear as of lately. Look at U 4 U's.
Yep. Yep. That's another one. That's another one that was been moving like crazy.
Yeah.
Yeah.
This was let me see. This was back in the summertime. This was trading around like $5. We're at like, what now? 27?
Yep. Yep.
Yeah.
Yep. Yep.
So if you look at where a lot of the money has been pouring in, you're looking at energy. And I'm not talking about oil. I'm talking about energy deliverers, providers, storage,
Storage mining.
nuclear. You know, these are the names that are getting a lot of attention. And as
Mhm.
I said before, utilities typically are a defensive sector where people buy utilities in market turmoil, right? Where stocks and growth is slow because obviously
Yep.
everybody needs power.
Yep.
But the XLU has now made an all-time high.
I mean, man, listen. If you guys know how crazy this is, go look at XLU for the past how many years?
Yeah, go look at XLU.
Go look at XLU for the past few years. I mean, that thing has been like between last year and this year, it broke through 1, 2, 3, 4 years, like when it was just like stuck. You know what I mean? So this is crazy. Like we broke through a 2023 high this year and we just kept going. We never stopped. And we
Yeah,
broke to the 2024 high That's crazy,
Yeah,
man.
this is not an environment where people are investing in utility companies. Like that's not typically what you see in a growth environment.
Nope.
But people know that we're going to build all these data centers, and there's demand for all of these
There's
data centers.
demand. There's demand.
The one thing that we're going to need is power. So,
Yep. Yep.
and another crazy thing is that gold is trading like a meme stock.
Oh my God. That's another one. Like all the money is going into gold. And the craziest thing, I think we talked about this like about this last week, where it is a very interesting time because it's like gold is up, the stock market is up. So it's like typically they're kind of like an inverse relationship, right?
Yeah,
But
correct.
it is crazy how like they're just both up there, you know? So
Yeah.
it's interesting times, man. It's interesting times, I tell you. Some of the banks actually reported this week. We have Wells Fargo. They reported about 21% increase in Q3 profit, which is crazy. They beat expectation for I'm sorry, that was PNC. PNC Financial reported about 21% increase in Q3 profit. Wells Fargo beat expectation with a net income of $5.5 billion. I mean, they're up like $5.11 billion from last year. Goldman Sachs, their net revenue of about $15.18 billion also. Go look at JPM, Chase is the same thing. Bank of America, Citi, like all the banks just reported and they just like, I mean, good numbers. I think the only bank that kind of reported a um guidance that was kind of like not good was probably PNC. I think they mentioned something in the guidance and outlook in the next few years.
Mm,
But
yeah.
other than that, man, all the banks were. I mean, the numbers doesn't look bad. The numbers are good.
And again, if you and I think what did Jamie Dimon come out and say that JP Morgan is going to invest what $1 trillion over the next 10 years or something like that.
Mm-hmm. Mm-hmm.
So to me, again, earnings drive stock prices.
Yep.
You know, where these companies are reporting their earnings, the numbers have been pretty good. I mean, if you look at, I
Mm-hmm.
think across the board, Morgan Stanley revenue beaten and EPS beat. I think Bank of America made a big move today. JPM sold off, but it made up for today. Wells Fargo made a big move today. So most
Mm-hmm.
of the banks that we've been seeing that have reported so far haven't really seen any like anything that scares me that oh my god, maybe there's there's too much enthusiasm in the market. I will say
Mm-hmm.
there is a little bit of enthusiasm, but earnings drive stock prices, and
Yep.
as long as the earnings continue to produce, to me, I don't know, now Trump or China can stop all the music. Let me not say I don't know what's going to stop all the music, but yeah, if the market is trading on what it sees and what businesses are producing, I mean, I just the path of less resistance is yeah, I think yeah, JP Morgan investing in rare earth materials as well. Yeah, so it looks like,
Yep.
people are starting to pivot from some of these traditional investments because I don't know if I've ever heard a bank come out and say that they're going to start, investing in rare earth metals. And I think what people are trying to do is they're trying to reduce their dependency on China because that's a market that China dominates at this point, which is why the United States is kind of at the mercy of China right now for those rare earth materials because a lot of that is needed to produce some of these chips and all of that stuff. So
But I mean, overall, I think there is no bad news that I see coming from those banks at least. Like
no,
nobody's saying the sky's gonna fall tomorrow. I mean, Jamie every now and then will come and say we're entering in this crazy territory, but he's around buying stuff, investing in this. So
mhm.
just be careful when you hear Jamie talk. I don't trust that guy.
Another thing I'll say too, if you look at some of these investment banks, the M&A activity on the investment banks
Crazy.
has been pretty
Yep.
robust because we
Yep.
didn't see a lot of M&A during the last
Administration, no.
administration. There wasn't a lot. Not a lot of M&A, wasn't really a lot of IP. Oh, we saw IPOs after COVID, some
Yep.
SPACs
Yep.
that were a little, and I'll go into detail about that a little bit later, but a lot more, merger and acquisition. Investment banks are making deals and doing deals. I think today, did we just see Papa John's go private? If I'm
Papa
not
John's?
mistaken, I think Papa John's just went private. I think it was Apollo Management is taking Papa John's private.
Oh, I didn't even notice that.
So we saw
Yep,
who else?
Apollo Management. Yep.
Yeah, I think who went private not too long ago? Was that EA Sports went
EA
private
Sports. Yep.
not too long ago? So the
Yep.
M&A activity is starting to help some of these banks generate a little bit more revenue. So
Yep. 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 But I guess I mean again, there's no crazy news that's coming out of the market right now that will potentially feel like we're gonna fall out this guy. But that leads me to the next question. Are we in a bubble though? Because the market, I mean, we've seen maybe like two pullback. The one that happens after Liberation Day, which is
mhm,
back in April, I believe. Then we see another dip, I think in August or August, I think because of the employment number or something like that.
yeah,
And then the most recent one,
was
God,
Friday.
was Friday.
Yeah,
Like, but those all got bought up. Like it wasn't like a prolonged, like what so we were saying COVID where things were dropping like 10, 20, 30, 40, 50%. You know what I mean?
correct.
It wasn't that. It was maybe like 5, 6%, we got bought back up. 10%, we got bought back up. So are we in a bubble? Like, I mean, what are your thoughts on that?
So I put out a an Instagram poll a couple of days ago, and I asked people and said, "Are we in an AI bubble?" And over 70% of people said that we are. I think 23% people, I think 77 said yes, 23% no. I'm in the camp where I will say that I don't think that we are in a bubble,
Mm,
but I will say that there is the potential to overshoot what the AI demand could be in the next 5 or 10 years. Now, let me give you an example. So if we go back to the dot-com bubble, right? When you think of a bubble, think of something that is being driven or increased with no substance, like a balloon. That's what there's no substance driving the demand, right?
yeah, yeah.
So when you look at the dot-com bubble, I think we mentioned this before, there was no real demand for these companies that were going public, right? There was no real demand. It was some of them didn't have revenue, some of them didn't even have a viable product. That was the demand for companies going public was being driven by nothing.
Mm-hmm.
So when nothing is driving demand, that to me is when you have a bubble. Let's go to the mortgage crisis. There was no demand for mortgages or for second mortgages or for HELOCs. Remember, you could get a home equity line of credit on your house without showing any income. You could get a mortgage without showing any income.
Any income.
So again, all of these loan applications, all of this money going into the system, people are saying, oh, loans, this. There was no real demand. There was no real demand. That's what I call a bubble. Now, let us transition to today. There is real demand for AI technology. That is a real thing.
Yep.
What I will also say is what is speeding up this process is the threat that China could beat the US to the finish line in this area. Because we're able to see what AI is able to do in real time. Like we're able to see it. You can see the efficiencies that it's creating. Now, the investment and the demand, they could possibly be overstating it. It's possible. Let me give you an example. Remember during COVID, right? A lot of companies went on hiring sprees,
Mm-hmm.
because they thought that the world was going to all of a sudden change, right? You had all of this demand for like remote work.
Yep.
So the demand was overstated. And then eventually it contracted and reverted back to where things needed to be.
Yep.
I will also say that during that time, right, you had easy money and you had a lot of SPACs going public. Now, those companies eventually got either they had to really show what they were made of.
Hmm.
Let's talk about Virgin Galactic. Go check that stock.
Go check that out. Yeah. Yeah.
Let's talk about Nikola.
Hmm.
Go check that stock. Go look at Rivian.
Yep.
Go check that stock. Go look at UPST.
Yep.
Go check that stock. Go check the Honest Company.
Hmm.
Go check that stock. Go check Allbirds. So these are all companies that were
Yep.
taking advantage of the environment that there was exuberance.
Yep. Yep.
All of these demands for SPACs and for for companies going companies going public, and people are saying, "Oh, we're in a bubble. We're in a bubble. We're in a bubble." I wouldn't call that a bubble. The bad actors who had nothing to prove or couldn't really prove their valuation got punished.
Got punished. Yep.
The companies that actually could prove their valuations and could prove their growth and could prove the demand for their product were just fine. So to me, I can't call today a bubble
Yep.
because you have legitimate earnings from your Nvidias, from
Yep.
your Googles, from your
Yep.
Amazons, from your Microsofts. You have legitimate earnings from these companies. Now, some of these small cap companies, like some of the quantum names and some of the energy names, even the OKLOs of the world and things like that, there could be an awakening if they're not able to justify their valuation. At some point, you're going to have to justify your valuation. It will come at some time. And if you fail the test, your stock will drop.
Mhm.
If you pass the test and you can justify the valuation, I think things will be fine. So to me, I think what will happen, the bad actors will get exposed at some point. They will
Facts.
get exposed.
Yep.
But the legit companies that have legit earnings growth, that have legit products, that are generating revenue and that are actually growing, those companies will be fine. Look at Robinhood. I think if I'm not mistaken, I don't think they went IPO to be a SPAC, but
Nope.
Robinhood
Nope.
got punished in the early years of their IPO,
Yep.
but eventually they figured it out and they were able to generate,
About to come back.
profit
Yeah.
margins. Now they're part of the S&P. So to me as an investor, just because the market is trading at all-time highs doesn't necessarily mean that we're in a bubble, right? Could there be a little bit more exuberance for the demand for AI? Yes, but I think a lot of that is driven because no one wants to get second place to China.
Hmm.
And China has shown what they can do without the best technology. Because people are saying that the chips that China has and the technology that they're using to drive their AI models is inferior to what the US has.
Yep.
But the deep seeks of the world and some of the things that you see that China's able to do with what they have is incredible. So no one wants to play second fiddle to China. So companies are just saying, you know what, we're going to just invest what we need rather than being left behind.
Hmm.
Could there be an overinvestment? It is possible. But again, those bad companies will eventually get exposed.
Go get
So
smoked
that
out.
they'll get smoked out. It's just
Hmm.
they'll get snuffed out again. So that's why I
Hmm.
said I can't call it a bubble because what's actually driving the demand for AI are legit companies. And if you look at the backbone of the AI system, it's being driven by NVIDIA.
Video. Yep.
And you can't tell me that NVIDIA's balance sheet is not Teflon.
Hmm. Hmm.
So, you know, but yeah, that's why I can't call it a bubble. I can't
Yep.
personally call it a bubble because
Yep.
there is
Yep.
substance behind it, but there might be an overshoot. It is possible. You could overshoot it. Let's say,
Absolutely.
Jensen Wong said what $1 trillion over the next couple of years. Maybe it falls short by $200 billion to only 800
Yep.
million or 900
Yep.
million. Who knows?
Yep. Yep.
But the demand is still real. So
Yep. No, I agree, man. I think a lot of people are gonna miss on the boat if you keep thinking this is a bubble. Like you're gonna be waiting for a long time. Because even if we had a pullback, I honestly I don't think the pullback is gonna last long.
Correct.
Because I think people are looking at. I mean, we might get pullback based on like valuation, right? It's like okay, maybe somebody's overvaluing your company or something like that. That might happen, but it's not gonna
Correct.
be.
Yes. Yes.
It's not gonna be like the doom and gloom that we saw in like in the 1999 2000 bubble I mean internet.com whatever,
Correct.
that whole crash. Like I don't think it's going to be that big, honestly. you know and if we get a pullback, so what? I mean, that's other opportunities for you to actually start looking at some of the solid companies that are going to rise from the ashes when it comes for that thing,
Correct.
right?
Because look at what happened this earlier this year, right? With
Mm-hmm.
with with Liberation Day, when
Yep.
we had that gigantic pullback.
Yep.
What was driving that pullback was not an actual threat to the businesses of these companies. It was just threats.
It was just uncertainty, like what's
Yeah,
going
it
to
was
happen.
it was
Yeah.
uncertainty and
Yep.
threats from the White
Mm-hmm.
House about, oh, we're going to put all of these exuberant tariffs on all of these countries, and eventually, when the smoke cleared and people figured out that that was just all BS,
Mm-hmm.
look what happened with the
Market, yeah.
market.
Market
Correct.
came back up, yeah.
So I'll also say this too, is that as an investor in this environment, you don't want the backbone of your portfolio to be based on speculative companies. I will say that again. You don't want the backbone of your portfolio to be in
Facts.
mostly speculative companies. What do I mean by that? If you got 10 grand and all of your 10 grand is like an OKLO, if
Yeah.
OKLO gets hit 20% or 30%, you deserve it.
Yeah. Yeah.
You deserve it because OKLO is still, again, it's a company that has viable technology that has not delivered on it yet.
Yep.
So you run the risk of anything can happen from now until that product actually gets delivered. Same thing with a lot of these small cap companies. If your portfolio is like 90% speculative small caps and they pull back 20 or 30%, you deserve it.
Yep.
Your
Yep.
portfolio should not be built around speculative companies. To
Facts.
me, if anything, they should be satellite positions. They should not be core positions. To me, your core positions should be something like SPY or QQQ, maybe even SMH. And if you're
Mm-hmm.
really, 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 really risky, maybe NVIDIA. Your when it comes to investing, to me, what determines success over time is, how should I put it? It's not having a lot of variability in how your portfolio performs.
Yep.
If you can maintain a consistent amount of variability over time, so what we call it in the investment world is standard deviation. What we
Mm-hmm.
look for is low standard deviation with not a lot of variance from the mean average return of the portfolio. And you do that through diversification.
Mm-hmm.
So as your portfolio grows, diversification becomes more important. And the easiest way to do that is if your core positions are built around ETFs that are already diversified or mutual funds. And then you can start adding your smaller positions or your speculative positions around that. Your
Yep.
speculative position should never be the basis or the backbone of your portfolio.
Facts.
Now, do some people do that? Yes. And sometimes they get lucky. But if you want consistency over a long period of time, diversification is how you do it.
Mm-hmm.
So,
Mm-hmm. Mm-hmm.
like you'll see some people on Reddit who was like, man, I put all of my life savings in like open and they turned like, 46 million into like 2 million. Like, that's a really great story.
Mm-hmm.
But the question is, can you do that again?
Yep. Yep.
And in
Yep.
most cases, the answer is no. So what does that tell you? It's called luck.
Yep. Yep. Yep.
That's
And that's the difference between like short-term investing and long-term investing. If you want to be
correct.
in this game for a long term,
On
like
time.
you
Diversification
really,
is your friend.
yep, you have to
Yeah.
lower the risk. Like you have to lower your risk, especially
Yeah.
in your long-term portfolio. Like there should not be a lot of changes in there. It should be maybe every now and then you do rebalancing, but it's like it should not be something that you have to look at all the time. You know what I
Hmm.
mean? And money from your short term needs to go into your long term. So that's that's how you make those short term work for you. You know, if you turn 1,000 into 100,000, some of that needs to go into your long term. You know,
And that's
so
why I had to sell some OKLO today.
I'm just saying.
I had to sell
Bro,
some.
you're better than me. I've been selling like every time it hits a new high. I've been selling. I think I'm down to like maybe like less than 10 shares. You know what I mean?
Okay.
But
Yeah. I
yeah, I
think
just
this
been
is the
selling.
first time where I actually sold a legit chunk.
Yeah,
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 this is the first time. So again, you can also too, this is another thing. If you're in a speculative investment, so let me give you an example. Let's just say I put 5,000 into OKLO. That 5,000 now is now well above 150,000. And let's just say I want to take 50,000 out. You can take 50,000 out of OKLO and then you can buy leaps with like 20,000.
yeah.
So you've decreased your exposure. You went from a 50,000 exposed position now to a 20,000 exposed position. Worst
Mhm.
case scenario, if that 20,000 goes to zero, right? You still
Yep,
netted 30,000.
yep,
So be very strategic with your risk when you start to see really big moves in your portfolio. Diversification, becomes important. Some of the OKLO funds, I might just invest it in like QQQ or something like that,
yeah,
or SPY,
yeah,
or Nvidia, so or just sit on cash. It's until I see a good opportunity.
yeah.
So again, don't build your portfolio around speculative investments. They should not be your core positions. Heck no. Heck no. And also, too, what's going to happen when they have a bad day and you see that negative 15 or negative 20% in
It's
your
gonna scare
portfolio,
you.
it's
It's
going to
gonna
scare
scare you.
you. Because if that's all you have, you're going to be like, man, why did I do that? Now,
Yep.
if you built a core position around QQQ that's like 10 grand and you got a couple $100 that drops 15 or 20%, that's not going to really rock the boat too much, you know?
Yep. 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 Absolutely.
Yeah. So diversification and limiting variability in your portfolio is key to long-term investing.
Yep.
Now, if you
Yep.
want to be in a position and be speculative for the next like 1 or 2 years and you want to roll the dice, hey man,
Have fun.
have fun. I'll pray for you. I hope everything works out. But that's not a long-term strategy.
Yeah.
That's not a long-term strategy. So
Facts.
just be very, very, very careful with you making that how you build your portfolio long term. So
Yep. Yep.
yeah,
So overall, are we in a bubble? I don't know. I don't think we
yeah.
are.
I don't think
But
we're in a bubble.
again, you do your own research and figure out,
Correct.
for your own self. But overall, like don't miss out on this move thinking this is gonna be a huge drop.
And I'm not saying go out there and put all your money in stocks today. No, I'm saying look for opportunities, understand where the money is going, make a list of good names that you can buy and hold long term that have good businesses
Yep.
and build your portfolio based on that. I'll also say this too. There's a lot of money that's not in the market. That's just sitting in
Not
money
yet.
market accounts.
Yep.
There are a lot of fund managers that are behind in performance. There's a lot. So you're starting to see when you see these drops, trust me, I'm pretty sure some of these fund managers chasing the market because they know they should have put the money to work back in April, but they was too
It
scared.
was too scared. It
They
was
knew
too
they
scared.
probably should have bought some in June, but they was too scared.
Yep.
Now it's kind of getting to the end of the year. They're underperforming the benchmark, and they're like, "What do we do?" They got to
Yep.
put the money to work.
Mm-hmm.
Go look at how much money is sitting in money market accounts today. Go look.
It's a lot of money.
It's a lot of money. That's a
Yep.
lot of money that has not been deployed yet. So
Yep.
we'll see what happens. But yeah,
Yep.
I can't call it a bubble. I'll call it There's some over exuberance. There's some pockets that may not make it.
Might not
But
make it.
again, I will say that the bad apples will eventually fall off at some point.
Facts. Once
Yeah.
those earning numbers start coming out and they're not delivering, you can start smoking them out.
Mm-hmm.
Okay, this one is not gonna make it. This one is not gonna make it.
Mm-hmm.
But yeah, so far though, like I think, like you said, some of those might be a little bit excitement, especially with the little ones that we keep seeing that just keep going like crazy. If
Mm-hmm.
short term, take advantage of them. For short term, take advantage of them, make some money. But long term, I'll be very cautious with them.
Yeah.
So
If you're gonna invest like a lot of money into these speculative investments and you're not sitting on these earnings calls and you get hit with like a big drop, you deserve it.
you're gonna get
Because I
smacked
keep trying to tell people, you buy individual names, you are an owner of the business.
pretty
A very
much.
small owner, but you're still an owner of the business. No business owner is just going to not be in tune to what's going on with the business. So if you miss the earnings call, the investor relations website, they're going to post all the details later on. You could even go on ChatGPT and ask for a summary of what the earnings call was about. There's no excuse today.
Yep. Yep.
So, make sure that if that is the route you want to go, that you get on these earnings calls and you listen to exactly what is going on with the business. Because
Yep.
to me, if I hear any hiccups about OKLO's like long-term trajectory of deploying their SMR technology in 2027, I might have to pull the plug.
Yep.
It
Yep.
may not be worth the risk of just trying to hold on. Now, did I got a good cost basis, which I think is good. But if something's going fundamentally wrong with the business, it might just be safer to pull the plug. And if I want to get in, maybe I get in using options rather than using the actual stock.
Yep. 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 The whole
So,
concept of I don't marry a stock,
oh
and
yeah,
date them and all this stuff. So
no,
yeah,
nope.
yeah. But again, the government still shut down. So there's a lot of numbers. There's a lot of numbers that we might not get this week or even next week, even next month. I don't
They're
know.
saying we're still going to get CPI. They're saying we're still
Okay.
going to get it. So,
But okay, where are they getting those numbers from though? I mean, who's
to be
reporting those numbers?
to be honest with you,
They gonna make
I,
it up.
I heard that the Bureau of Labor Statistics will deliver CPI next week.
Okay. We shall
We'll
see
we'll
then.
see. We'll see.
We shall
So,
see, man. But that's the only volatility that I can honestly think of is this whole government shutdown. If something happened where they reach a deal and something, I don't know what's that gonna do to the market. Are we gonna be running up or are we gonna be dropping? Or is that already baked in with this last week drop?
I would
So I
say
don't
it's
know.
going to be a non-starter
Yeah.
because as this government shutdown continues to linger, the market has basically ignored it. Now, I
The
could be
market
wrong,
don't care. The market
because right
don't
now
care.
we do have a market that is trading on headlines. So
Yep.
we'll
Yep.
have to wait and see.
Yep. But yeah, overall, man, I think we covered a lot today. I don't know if you have any other last minute things you wanted to say, but I think we have covered a lot today.
Yeah. Yeah. I just want to emphasize that point about not making some of these speculative small cap positions your core positions. Yeah. That can be a recipe for long-term disaster.
Mm-hmm.
So I'm not
Mm-hmm.
saying don't invest in them, but if you got again, you got a $10,000 portfolio and that's all you got,
Yeah.
just take that with a grain of salt because you know what type of risk you're taking. You
Yep.
know what type
Yep.
of risk you're taking.
Yep. Yep.
Because like I said, OKLO made a 15% swing today. Up 9, down 5. And if that gets you excited,
That's a
hey
crazy
man,
volatility.
yeah, that's
That is a
crazy.
crazy volatility.
That's crazy.
Yeah.
I don't
Well,
like that.
well,
So
that wraps up today's market rundown, man. As always, man, we always tell you guys stay focused, stay informed. Don't trade the noise, man. Keep your eyes open. Trade the plan. As usual, we'll keep tracking all the catalyst earnings, any headlines that we can deliver to you all. But again, follow us on social media. Send us any messages that you want us to. If you have any questions, anything like that, please let us know. But yeah, thanks for tuning into the Wall Street Rundown. Until next time, I'm Billy. We got